Good afternoon and good evening, everyone. This is Financial Literacy 101. I'm your host, Ross World, and today we will be discussing the best robo-advisors, okay? The best robo-advisor. Now, of course, anytime giving information, the information can be somewhat biased, okay? The information can be somewhat biased. So let's get right into it. Let's not waste too much time here. We have a little bit of information to actually go over. Okay, guys, we have quite a bit of information to go over, but I would try not to be so chatty about it. All right, first and foremost, I like to give you the definition, maybe even a couple of definitions. I like to give you the information so you can make the best possible decision with your money. All right. This definition for what is a robo-advisor when it comes to investments is coming from Nerd Wallet, okay? A robo-advisor is an online automated investment management service. Robo-advisors use computer algorithms to build a portfolio and manage asset allocations based on your risk tolerance and investing goals. A daily portfolio management is handled by software rather than by a human financial advisor. Robo-advisor charge lower fees, which can translate to higher long-term returns for investors. Again, it's handled by software and algorithms rather than a human financial advisor, which is lower fees and can translate to higher returns over the course of time. That is the first definition. That came from Nerd Wallet, and the second definition of a robo-advisor is coming from Wikipedia. Robo-advisors typically allocate a client's assets on the basis of risk preference and desired target return, while robo-advisors have the capability of allocating client assets in many investment products such as stocks, bonds, futures, commodities, real estate. The funds are often directed towards ETF portfolios for those low fees. Now, here's a good question from CNBC. That's CNBC. Is robo-investing a good idea? Here are their thoughts. Robo-advisors are a great option for entry-level investors because of their low fees, low cost threshold, and ease of use. If you have $25,000 or less to invest, robo-advisors may be a great option to help you get started. Robo-advisors provide an excellent starting point to building wealth. Again, is this a redundancy? This is from thebalance.com. How do robo-investors work? With a robo-advisor, you pay a service fee and you pay the expenses of investments used. Each robo-advisor has a reasonable service fee that may be structured as a fixed monthly fee or as a percentage of assets. That type of fee is taken out of the assets of the fund before any returns are allocated to investors. And you're going to see that some may have monthly fees, and some have fees depending on how much money you have in it, and some don't even have fees. All right, let's see here. And then it says, how much does a robo-advisor cost? We're going to get to that soon as well. This is come from robo-advisorpros.com, but it says fee structure, free for the first 5,000, fees of 0.25%, or simply free. Okay, first and foremost, this information is coming from Nerd Wallet and bankrate.com of the comparisons and all the robo-advisors we're going to talk about today. Now, again, depending on the best robo-advisor and the information source that I'm getting the information from is biased, okay? Because on Nerd Wallet, on nerdwallet.com, they have Wealthfront as the best robo-advisor at a 5.0 out of 5, 1 through 5, 5.0, right? We're going to just talk about little snippets about it because I want to cover quite a bit of information so you guys make a really intelligent and conscious decision where you're going to put your money at in 2020, okay? 2019 is done. Now you're starting your tax season for the next season and where you're going to invest your money, where it's going to actually help boost your finances, okay? And a lot of you, like even myself, I'm hands-on with my investing, and I also use a robo-advisor. So I'll go over the robo-advisors, and then I will tell you which one that I use that I believe is also one of the best. Okay, this depending. Now, a lot of these have so much information. I'm going to briefly go over a couple of them, and then I'll think the best two, or what I think. I'll go into vivid detail about those, okay? We will really construct and break down, deconstruct the information that contains here. Okay, the first one on the list is Wealthfront. The rating here is 5.0 out of 5 with NerdWallet. The fees is a 0.25% management fee. The account minimum, that means the amount that you have to open the account with, is $500. Now, I have a link in the description for Wealthfront. Do I have a link in the description? I should have a link in the description, which is a promotion that will give you $5,000 that they will actually manage for free off the jump instead of you paying that amount. Or you can go over NerdWallet and they also have the same promotion. Okay. All right. What we like about it, Wealthfront has built client trust by offering fee management on the first $5,000. With NerdWallet's promotion with the company stock level tax harvesting service really shines. And tax harvesting is a way that they construct taxes where they actually hold investments or they pause investments to a particular time, to a very strategic time where you pay the less taxes. Now, that's some really powerful software in my opinion, especially when there's no humans involved. Now, humans made the software and they may even be monitoring the software, but they're not directly doing things on your behalf for each single investor. Then it says, stock level tax loss harvesting service really shines, adding as much as 2% to annual investment performance for eligible accounts. So the 2% you would have lost is the amount that they're saving, or rather that you'll be receiving because of their tax loss harvesting service. Here are the pros. First 5,000 managed for free if you use my promotion or NerdWallet's promotion. Low ETF expense ratios, daily tax loss harvesting, and also automatic rebalancing. Automatic rebalancing. Okay, the cons: no fractional shares, no large balance accounts. And I think we probably need to break down auto rebalancing. Anybody want to know what auto rebalancing is? Okay, I can give you my definition, but sometimes I know how people's minds work. I like to get a basic definition so we are all on the same. We're all on the same page. Now, this definition is coming from acorns.com. Automatic rebalancing is a method of maintaining your specific portfolio allocations. Market fluctuations may cause some of the securities in your portfolio to appreciate or depreciate in value. This ensures that the securities in your investment account are proportioned correctly, okay? They proportion them correctly. All right, that came from acorns.com. Okay, I don't want to use that definition from Investor Junkie. It was all over the place, ladies and gentlemen. It was all over the place. But I will go to one of my favorite websites. This is from Investopedia. It says, rebalancing is the process of realignment, the weightings of a portfolio of assets. Rebalancing involves periodically buying or selling assets in a portfolio to maintain an original or desired level of asset allocation or risk. Now, take for instance, Wealthfront. My risk tolerance out of 1 through 10 is 8. Okay, so I always advise people: the younger you are, the more risky you should be, those high returns. But as you get older in age, you want to safeguard some of your returns. You may want to lower that down to 5, maybe even 4, depending on your age bracket. And that's another topic for another video. Depending on your age, what should your risk tolerance be? Because the different intricacies in that is, do you have kids? How old are your kids? Do you own your house? Don't own your house? How many liabilities do you have? How many assets do you have? How much income you have? How much money you have in the bank? Et cetera, et cetera, et cetera. It just grows when you talk about what is the proper risk level for your age or where you are at in life. Moving right along. Ally Invest. Now, Ally Invest have 0 fees, okay? The account minimum is $100. And this is why they like it. Ally Invest managed portfolios is best suited to retirement accounts or loyal Ally customers who want to house a management account, a trading account, and their bank accounts under one roof. Now, here's the key, the difference between Wealthfront and Ally. The lack of tax loss harvesting would be an issue for investors with taxable brokerage accounts. That means the people who are just simply using the Robo-Advisor for profit, and you're going to pay taxes on that. Take, for instance, you're not doing a Roth IRA, traditional IRA, 401k, etc. You're just doing the brokerage account for profit. They don't have tax loss harvesting. Pros: solid investment selections, integration for Ally Bank and brokerage clients. Con: no tax loss harvesting. Okay. Number 3 on the list: Betterment. Nerve Wallet. Now, Nerve Wallet gave, for some reason, Nerve Wallet gave Ally Invest a 4.0 and gave Betterment a 5.0. Fees, 0.25%. Account minimum is 0. Their promotion is free up to 1 year. Why they like it? Betterment has maintained its status as the largest independent robo-advisor for a reason. The company offers a powerful combination of goal-based tools, affordable management fees, and no account minimums. The pros: no account minimum, fractional shares, limited uninvestment cash, robust goal-based tools, and their cons is no direct indexing. All right. And number 4 on the list is Elvest. That's ELLE Vest. Elvest. Nerve Wallet rating of 4.5. Fees 0, 2.5 management fee. Account minimum is 0. Promotion is up to $750. Okay. Let's get into the details. Why they like it. They said that this advisor markets itself to women and takes a goal-focused approach that factors into women's lower incomes, lifetime earnings, and longer lifespans. With its 0 account minimum, competitive advisory fees ranging from 2.5% to 0.5% of assets, and unlimited access to financial advisors, premium clients can talk to CFPs. Elvest is an appealing choice for investors of any gender. Pros: low account minimum and fees, goal-focused investment approach, portfolio mix that factors women's needs. And the cons: few accounts supported, no tax loss harvesting. And by honorable mention, you have Sophie. That's a 4.5 Nerve Wallet, and Sophie is spelled SOFI. Fees are 0%. Account minimum is 0, and it's free. So there's no really promotion, so you get free management. Why they like it? Automated investment is great for beginning, cost-conscious investors who have favor a hands-off approach. Plus, as a customer, you could be eligible for bonuses on other SoFi products. Pros: broad range of low-cost investments, free management, automatic rebalancing, customer support, access to certified financial planners. Cons: limited account types, no tax loss harvesting. Of course, these people love tax loss harvesting. Now, I'm going to break down, or what I may believe, what are the best 2 or 3 possible robo investors. Okay. So like I said, I'm going to try to get this video under an hour, but there's quite a bit of information. But nonetheless, we're going to tackle it. What's going on, Wayne Peters? I appreciate it. He says, hey, Ross World, when you get a moment, can you do a video in retirement options for self-employed for those particularly working in the gig economy? Yeah, I got your comments. I read about it. People who are doing Uber, Lyft, things of that nature. I got you. It's on the list. It's on the list, brother. Don't worry about it. It's on the list. Thank you for attending this live session for Robo-Advisors. Okay. Let's get into some vivid details. So first and foremost, I'm just gonna kill the nanny on this one. Kill the nanny. I just made that up. I don't know what that means. Nannies usually take care of things, pamper things. I'm gonna go with it. Kill the nanny. I'm gonna kill the nanny on this one. So my personal robo investor, where I have everything tied into, is no other than Wealthfront. Okay, Wealthfront. I like Wealthfront, and I'm gonna give you some reasons why. I'm gonna tell you what Wealthfront. I'm gonna go rightly my resources now. Let me know in the chat if you want to look at what I'm looking at. or you just rather me talk to you and you listen. Well, we can look at the same thing. Doesn't matter to me. I like to show my screen instead of just reading off the screen. It's more interactive. So you have questions, let me know. All right. Wealthfront is best for hands-off investors, meaning you're going to allocate a certain amount of money a month, and they're going to invest it based upon your risk tolerance. Taxable accounts, as we talk about that tax loss harvesting. Then they have free financial tools. Even if you don't have a Wealthfront account, you can go in and use their tools. Then most importantly, what I always tell parents, 529 college savings plan management. Yes, you can open up a 529 college savings plan investment. All right. So I saw that D Journal said, show it. All right, we're going to show it then. If I know how to work, I see what I did here. Here I go again, guys. Bear with me with my horrible, I'm really trying to figure this thing out. Let me set my parameters first, because last time I messed all this up. Let's see here. I don't know what I'm doing here. Give me 1 second, guys. See, I should have fixed this. All right, as I fix this, excuse me, I'm still going to be giving you guys the information as I'm playing around with this thing here. Anyway, okay. Wealthfront at a glance. Account minimum is $500 that we spoke before. If you use my promotion at the bottom or you use their promotion, they will advise it for free up until $5,000. Then you also have the investment expense ratios. It says ETF expense ratios average, their average is 0.08%. Now, if you looked at the video, the America's Best 401k, we talked about that you want anyone to be handling your accounts, your investment accounts, for less than 1%. The average on Wealthfront is 0.08%. You don't need to know math to know that there's no number in front of the decimal, but a zero. So it's not even 1%. Simple, right? I know. Portfolios that include the Wealthfront Risk Party Fund may have an overall expense ratio of 0.11. Okay. So basically they're saying that seems as though the highest that they may go. Okay. The highest that they may go. Anyway, moving right along. It says account fees, annual transfer closing, none. Portfolio mix. ETFs are coming from 11 asset classes, okay? 11 asset classes, and then portfolio generally consists of 6 to 8 individuals, stocks held in larger accounts. Account supported. Now, this is key, guys. This is very key. Account supported, and don't worry about it, D-Journal. I'm still working on it in the background trying to fix these things. Account supported individual and joint non-retirement accounts, where you're just trying to do this for profit. You ain't trying to put it in a retirement. You want to make money now. You ain't trying to take it out when you're 59 or you're 60. Like, no, I want to take it out when I want to take it out. Roth, okay, there's your individual and joint non-retirement accounts. Then you have Roth, traditional, SCP, and rollover IRAs. Now, Wayne Peters, this works for you. SCP. What does SCP mean? Self-employment, okay, self-employment. And rollover IRAs. They also have trust. Now, if you look at some of my old videos, I always talk about that you should have a will and you should have a trust for different reasons. I always put out KISS Trust, which is a low cost trust. Now, a lot of times when people talk about trust, they believe that it is for very rich and powerful people. No, KISS Trust is a very low cost trust that you can have irrevocable and revocable trust. Meaning irrevocable, meaning you can't touch it regardless of what you want to do. And you can do a lot of safeguard with taxing and leave it for that particular person's or people. Revocable trust, meaning you can put it in, take it out, put it in, take it out. Okay, pretty much simple. And then cash account, not charge management fee. Your cash accounts are not charge management fee. Now, tax strategies. Daily tax law harvesting on all taxable accounts, okay? Those non-retirement accounts. Then you have your stock level tax harvesting on accounts over $100,000. Then you have smart beta on balances over $500,000. TurboTax customers, so if you file your taxes with TurboTax, customers can easily import tax loss harvesting data from Wealthfront. Okay? All right? Now, automatic rebalancing, that's free. Then it says human advisor options, they have none. And then the tools that they have for you to use. Robust and free financial planning tools to help plan for life events, including retirement, home purchases, college, and extended travel. Ability to link outside accounts. Now, that's one of the key features that I love about Wealthfront, that you have the ability to link external accounts. It tells you how much you're worth today, and it tells you how much you are worth in your retirement, okay? Whatever age you pick on their graph. Savings account cash management. High yield savings account with up to $1 million in FDIC insurance and no fees. I'm going to say it again. High yield savings account with up to $1 million in the Federal Deposit Insurance Company insurance and no fees. Customer support options includes website transparency, phone support Monday through Friday, 10 a.m. to 8 p.m. Eastern, email support. Then it says, okay, that's their thing. All right. So, let's see. Should I break it down any more? Here's a key, line of credit. You can use this, line of credit. I'm going to try to give you pertinent information. Line of credit. Wealthfront customers who have at least $25,000 in their account can borrow up to 30% of the value of their portfolios without filing out an application, undergoing a credit check, or paying any fees. Wealthfront currently charges annual interest rate of between 3.9% and 5.15%. And they said that the rates change. So you can actually borrow against your account for at least $25,000, okay, without filling out an application, without undergoing a credit check, or paying any fees, okay? So I know a lot of times, even with my TSP, I remember I borrowed against my TSP when I paid for my first down payment of my house. At the time, I don't really think it was a good idea, but I did it anyway because I didn't have the money, but I had it in my retirement account. And they charged me, I think, about 4% or something like that. And my question was always, where does our 4% go? Anyway, it goes in their pockets. That's where it goes. And they have a high interest rate for their for their savings account, right? That doesn't charge any money. Their interest rate currently pays out at 1.82%. Okay. And here's the shortfalls for you. Here's the shortfalls for Wealthfront, and then we're going to move on. I'm still working on trying to show you my screen, guys. I know last time the screen was off to the left. If not, I'm gonna have to just talk to you, and I'll give you my websites. All right. Matter of fact, I'll put the websites in the chat room really quickly here. Cash balance. Wealthfront doesn't buy fractional shares or ETFs, which prevents the company from investing your entire deposit. Also, it maintains a cash balance equal to the fees you're projected to owe over the next year. So accounts are likely to experience a small level of cash drag. The percentage held in cash isn't nearly as high as Schwab's allocation, which is a minimum of 6%, but it's worth noting for investors who prefer the fractional shares offered by other robo-advisors. So again, I'm going to list this website in the chat room so you can go back and reference for yourself, guys. All right. That is where that information came from. Moving right along. Let me see if I can figure this display capture out while we're doing this. I suck at this, guys. I apologize. I'm even trying to delete this thing. Bear with me. The next one we're going to get into detail about is Ally Invest, okay? Video capture device. Oh, no. That's wrong. Everyone blame D General for the pause in information, guys. Well, nah, just blame me. I should have taken care of this. Okay, there we go. All right, I'm gonna bring this over here, guys. There we go. I figured it out. Well, I think I did anyway. All right, Neural Wallet. As you see, no cons. We're gonna jump right into it. No tax loss harvesting. All right, Ally Invest Managed Portfolio is best for existing Ally banking or brokerage customers, hands-off investing, automatic rebalancing. Account minimum $100. Account management fee $0 for clients who opt for cash enhanced management portfolio, which requires a 30% cash allocation. Now, here's the fee: 0.30% for clients who opt for the legacy managed portfolio option, which does not have the cash requirement. Investment expense ratios are between 0.11 and 0.17, depending on your portfolio. Account fees: $50 IRA closing fee, no fee to close brokerage account. So if you close it, they're not going to charge you. Portfolio mix: portfolios pull from 17 ETFs. That's 17 ETFs covering a variety of asset classes, top optimized, and income and SR portfolio options. Account supported individual and joint non-retirement accounts, and then your Roth, traditional, and rollover IRAs. Now, again, Wayne Peters, this does not have your SEP for your self-employment. And guys who wants to start that 529 college savings plan, it doesn't contain that either if you refer to our last link. Tax strategy: tax optimized investment in taxable accounts, no tax loss harvesting. Automatic balancing is free. No human advisor not offered. I think this has changed for Ally. You might want to do a deep dive into this, guys. I believe that they actually provide human advisors now. And tools: portfolio tracking and management tools, mobile apps, and desktop functions. They also have their savings account of APY, and they have customer support options, includes website transparency, phone, email, and live chat. And there are no promotion because it is free. Okay, let's move down. Let's see what the shortfalls are. Tax law harvesting: the company doesn't offer the feature, which is standard at many robo-advisors. This year, however, customers with non-retirement accounts can opt into a tax optimized portfolio, which uses municipal bond ETFs to help reduce Uncle Sam's cut. So there is some tax advantage there with Ally, okay, with Ally, but not on the same level as Wealthfront. And I don't know for certain if they pull into all your external accounts and tell you how much you're worth today and how much you'll be worth at retirement at your current saving goals. When I mean that Ally pulls into, and I'm gonna pop up my Wealthfront account here, not for you guys to see, okay? Just for me. Anybody looking at my account? How much money you got, Ross World? Can you let me hold something, bruh? Let me hold something. Can I borrow a couple of thousands from you? Well, I do have thousands when it comes to pesos. All right. So I'm going to tell you some of the accounts that I have linked into my Wealthfront. I have my Fidelity linked into my Wealthfront, my TSP, my Vanguard, my Fundrise, my Stash, my Charles Schwab, my Robinhood, my Navy Federal, my Sterling National Bank, my Capital One. Those all of the accounts that I actually have tied into my Wealthfront account. Okay, moving right along. We're moving on to Betterment. I remember trying to invest with Betterment, and I just, for some reason, like Wealthfront a little bit better. A lot of times with me, guys, I just love the way things look. Okay. Let's read the bottom line. We didn't do it for the others, but for this one, we will. Betterment is a clear leader among robo-advisors with 2 service options. Betterment Digital has no account minimum and charges 0.25% of assets under management annually. And Betterment Premium provides unlimited phone access to certified financial planners for a 0.40 fee and a 100,000 account minimum. So if you one of those 100,000-aires out there, those 100,000-aires, If you're one of those guys, then you might want a certified financial planner, and your annual fee is only going to be 0.4%. Okay. And it says unlimited phone access. That means you can call these guys whenever they're open, and there's no limit to how much or how long you can talk to. And that can actually help people, so you can always be allocating your assets within your investment portfolio, so you can maximize returns. And 0.40% fee is really low. I told you, anything under 1%, guys, is really good. And anything under 0.5% is even better. All right, management fee, 0.25%. And they have a promotion up to a year of free management with a qualifying deposit. That's a qualifying deposit. But you can open your account with zero. Okay, let's move right along. Betterment is best for hands-off investors. Now, all of these are best for hands-off investors. This is one of the things that Nerve Wallet wanted to point out. But all of these are good for hands-off investors. Retirement investors, users with low balances. Okay, don't forget, with Wealthfront, you had to put in $500, but with Ally Invest, you put in zero. Those who want automatic rebalancing, again, all of these are offering automatic rebalancing. That is the reason for a Robo-Advisor. Okay. Users who like goal-based tools. Account minimum, zero. For Betterment Digital, and for Premium, you need $100,000. For account management fee is 0.25% for Betterment Digital, and for Premium, 0.40%. Now with Wealthfront, it was as well 0.25%, but with my promotion that should be in the details of this video, you get 5,000 managed for free, so you don't pay that 0.25%. Also, if you go through Nerve Wallet with the link that I provided. Investment expense ratios. It starts from 0.07% to 0.17%. Again, all of these looks like they're ranging from 0.05% to 0.17%. I don't even worry about these zeros, and it's low, guys. It's very, 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 very low. Account fees, none. Portfolio mix. Okay, portfolio mix. Standard portfolio uses ETFs from about 12 asset classes. Wealthfront, I believe it was 11. Ally Invest, I believe, was 17. And this is 12. Okay. Diversification is key. Hey, man, anything over 6 or 7 is great. So let's not get too caught up in those details. Social responsible investing, smart beta, and target income portfolios available to adjust percentage of portfolio investments. Okay. Account supported. Now, there are some options opened up just like Wealthfront. Individual and joint non-retirement accounts. Roth traditional SEP. Okay. That's for Yungwang. And rollover IRAs. You have your trust just as well as Wealthfront. The ability to link external accounts for personal advice, but not direct management. Personalized advice. That's great. Okay. That's great. They're giving you advice. Cash account not charged. Now, these mirror up with Wealthfront directly, except for one thing. I did not see a 529 college plan that Wealthfront has. Now, at the time, I was thinking about my son, but him having scholarship and things of that nature, the 529 college plan is just paying him a monthly stipend. Tax strategy. Daily tax loss harvesting on all taxable accounts. Tax coordinated portfolio 2 allocates access across retirement and taxable accounts according to tax impact. Okay. Basically, instead of reading all this, I'm just going to tell you they're trying to do the best with your money so you pay less taxes. Automatic rebalancing, free. Human advisory option. For an extra fee, advice packages include consultations. Premium customers get unlimited telephone calls with a team of certified financial planners. Tools, they have numerous of calculators and goal projected tools, blah, blah, blah. And then just as well as Wealthfront, high yield savings with FDIC insurance up to $1 million. Okay. And then unlimited transfers. And here's their time. And then here's their promotion. Nerve wallets get 12 months of free management deposit of $15,000 to $100,000. And then from $100,000 to $250,000, 6 months free. Okay. Where Betterment shines. Okay. Let's move right along. Let's get down to not goals-based savings. You guys can do a deep dive. I'm looking for, here we go. I love to talk about where Betterment falls short. Like many other robo-advisors, Betterment offers tax loss harvesting on taxable accounts. The platform automatically reviews your investments daily to reduce tax exposure. That's the same thing that Wealthfront was referring to. Okay, guys. Now, granted, Ally was second on the list, but Ally does not have tax loss harvesting or even tax loss indexing like Wealthfront and I believe Betterment. But it doesn't have a direct indexing tool like none other than Wealthfront, which provides this service on taxable accounts with a balance of 100,000 or more. Direct indexing buys the single securities held by an index rather than the ETF tracking the index. You see what I'm saying? It's going to buy the index rather than ETF. That can help single out tax loss harvesting opportunities and save investors with taxable accounts a significant amount of money. All right. Moving right along, we're going to go back here. And last but not least, on this list, we're going to go to L Invest that has a 4.5 Nerve Wallet rating. Okay. We're going to get into the details and go over the full review. We'll go over the full review. And I'm not ignoring you guys. I will go over some of you guys' comments, okay? All right, bottom line, LVest brings investors innovative goal-based tools and low cost with a competitive 0.25% fee for its digital offering. LVest Premium charges 0.50%, that's a 0.5%, but pairs each client with a dedicated certified financial planner, CFP. All right, let's move right along. LVest is good for goal-based investing, hands-off investors, access to dedicated CFPs, beginning investors, value-based investing, and career coaching. Account minimum, 0. For your digital and premium, if you notice they use the same terminology as Betterment, you need $50,000. Account management fee for your digital is 0.25%. For your premium is 0.5%. 0.50%. Investment expense ratios, I told you, they go from 0.05% all the way up to 0.17 for your others. I'm just doing a general average of all the ones we have covered today. Account fees, $100 for full account transfers out, $5 per security for partial transfers, and $25 minimum, $75 maximum. Now, portfolio mix, they have quite a bit. They have 21 asset classes covered. Core portfolios draw from 20 ETFs. Impact portfolios draw from 27 ETFs and mutual funds. And some customization allow. Account supported. You have your individual non-retirement accounts, not joint. See, the other ones had joint. Traditional Roth and SEPs, that's your self-employment IRAs. LVest also provides asset allocation advice on 401k accounts, but does not directly manage them. Again, that's that good old advice for free. Tax strategy, tax optimized asset location. Now, they don't have tax law harvesting like Wealthfront, and they don't have your tax index like Wealthfront and like Betterment. All right, human advisor option. You have your digital clients can speak to the company's concierge team for high-level financial guidance, and then your premium clients can talk to a team of certified financial advisors. Tools show up between investment choices, mobile app. Okay, we got it. Basic account with 0.01% interest rate designed for emergency fund management fees does not apply to bond. Now, of course, this isn't great at all. This is not high yield at all, guys. I wouldn't even put my money in their particular cash bank. Okay, with Wealthfront, they told you 1.82%, which is not bad. I changed my money to Sterling Bank, which is now at 2.10. We understand that inflation is at 3%. We should always try to get closer to 3% as possible so we don't lose any money. And I will be looking into high yield savings account that are close to 3% or even 3%. And that will be in a video near you. All right, moving right along. All right, let's go to their shortfalls. Here we go. Low interest rate on short-term savings. Okay, we went over that. It says other robo-advisors offer savings account or cash management accounts options paying upward of 2%. I'm at the last sentence if you can see that. Account supported. We went over those, and then it says no tax loss harvesting, and those are your shortfalls for that particular one. Okay. I'm up here trying to switch back and forth. Excuse me. I don't know what's going on with. All right, there I go. All right, guys. Now, that was from Nerve Wallet. And quite frankly, I'm going to go over bank rates options that they have, okay? And they named a few. And again, I'll be coming out maybe tomorrow. I think I'll come out tomorrow with a high yield savings one. Try to make that as short as possible. All right. Now, I'm going to switch over screens again. Please cross your fingers. I'm having technical difficulties. All right. Overall top advisors in January 2020. Again, this information is coming from Bankrate. I'm not going to talk a hole in your head. We're just going to go over two different websites. As you can see, Betterment for the best service. Some of us, we really love to be serviced, especially when we don't have the information for ourselves, okay? Just because one have low fees versus best service, sometimes we might just want best service. As one of the top players in the industry, Betterment sets the standard for service. It offers automatic rebalancing, tax loss harvesting, a personalized retirement plan, as well as the opportunity to buy fractional shares. Now, Wealthfront, you do not have the opportunity to buy fractional shares. They actually hold your money until that next amount comes in for them to buy and whole entire share. So you guys who are into fractional shares, this may be good because you also have tax loss harvesting, okay? The same as Wealthfront. The only difference is that I can actually predict between the two is that Wealthfront has a 529 college plan. There may be some other information that I'm missing, but I'm just giving a general overall synopsis of what we went over today. You can sync outside accounts too and receive advice on them, while customer support is available 7 days a week. Betterment's premium plan ups the game with access to a human advisor, okay? All right, and we're going to go with Wealthfront. Best for low fees, one of the largest robo-advisors. Wealthfront offers goal-based investing that helps you understand how your financial choices today affect your future. Wealthfront also provides tax loss harvesting, and the fees on its ETFs are among the lowest in the industry. See, low fees, baby, low fees. Plus, the firm provides attractive interest rate on its FDIC insured cash management account, okay? Like I was saying, that 1.82% for your savings. So if you with Wells Fargo, Bank of America, US Bank, look at your savings for your emergency fund, guys. They're not even 1%. And you can do a one-stop shop with Wealthfront and a one-stop shop with Betterment. I don't know the key number in Betterment for their savings account, but Bankrate pointed out that this one actually has high yield savings and doesn't charge management fees for either. Okay. And we have Elvest. It says targets women specifically. Its financial planning incorporates the needs of everyone. Elvest is great for goal-based investing. If you have multiple goals, the base service level offers automatic rebalancing, tax maximization, while the premium account ups the ante with one-on-one access to certified financial planners and executive coaching. Okay. Then it goes to Sophie, Charles Schwab. Those are the top ones. But as I told you before, the one I invest with, let me see your pretty faces. Give me a second here, guys. The one I invest with is Wealthfront. Now, my top two choices, even though they charge a fee, but sometimes you, in my opinion, some people say the best things in life are free. Air is free if you're not in China. You live in a high tree area, air is free, but sometimes you have to pay for the best service, okay? Sometimes you have to pay for the best service. Like I said, my choice is Wealthfront for myself, but the best two is, drum roll please, Wealthfront and Betterment. You knew it. I don't know why all the dramatics, right? You knew it. So hopefully we went over quite a bit of information. Now, if you caught the mid part of this video, if you caught the end part of this video, if you want to know definition of what a robo-advisor is a robo-advisor good for you? just started the video from the very beginning, and I went over quite a few definitions so you can get that base of information to know what the hell is a robo-advisor. And basically, I do a summary. It's software backed by numbers, backed by math, backed by complicated algorithms based upon your risk level, 1 through 10, on some in diversification or percentages on others, how you want to invest, whether it be a non-retirement account, retirement account, self-employment account, 401k account, 529 college plan, and etc. Now, the reason why I went with Betterment and Wealthfront is I'm biased, because we all are, but quite frankly, you have the best options. You have more options than the other ones I went over. Now, if you know a little bit about investing, I will lean more to the Wealthfront side, because you can also do your high yield savings, even though tomorrow I'm going to come out with a video with high yield savings, depending on how much money you have. Because quite frankly, I'm trying to get you guys before you guys go file your taxes, right? Because some of you like, man, shoot, I'm buying some rims. I hope y'all not doing that. I'm kidding. I'm being stereotypical. But some of you are buying rims. But you guys already have your money planned out for you. Hopefully, some of you are planning to invest or save it all, or at least 50% of your tax return, depending on how much you receive. Hopefully, some of you are going to use your tax returns to pay down your debt. All right, I'm off of it. So I'll come out with one for high yield savings, but you can also use Wealthfront as a one-stop shop. Now, Betterment, for you guys who are new in investing, Betterment has better services, because you can also talk to a financial planner, a human advisor, when you go with their premium service versus the digital. Like, you can start off doing the digital, allocate money a month. And I'm going to tell you this, guys, monthly investment is your best way. Don't wait till you get some big lump of money and then try to time the market, because we understand that monthly investing is also a form of DCA, dollar cost averaging, okay? Dollar cost averaging. When you allocate a certain amount of money a month, whether it be to your savings or to your investment, you're doing the best possible thing over time, and you get used to that paycheck. You get used to the money that's coming in, right? So your money hits your bank account, and then maybe the first or second, or depending on how many times you get paid a month, it goes in different ways. And now these particular advisors, they have options where you want to invest monthly, bi-monthly, and some of them even have weekly, because some of you get paid by the week. Now, you can do like, I'm going to do $100 a week, $250 bi-weekly, $500 a month, however you want to do it. But you want to invest it automatically, because if you're waiting for you to invest your money, just by, not automatically, just by you trying to do it yourself, you ain't going to do it. I know you're not. You're not going to do it. You're not going to do it. You're going to forget. Oh, man, I shouldn't have spent that money. Oh, that's right. I forgot. I should have invested. Man, come on. Come on. That's why I always say invest, take a certain amount, do your budget. If anybody hears me, I beat people up about their budget. People are like, hey, man, can you help me with my finances? Do you have a budget? 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 I don't know how I can beat this into your eyes. You cannot effectively do anything in your finances and know what's going on if you don't have a budget. Okay, I'm going to make it real for you guys. I'm going to make it real. If you got kids playing in the back room and you're hearing, so you hear all this noise, what do you go do? You do two things. First, you're like, hey, stop all that goddamn noise back there. Especially guys, we don't want to get up. We watching the game. I'm trying to watch the football game. If I come up, I'm whooping somebody's ass. You know what I'm talking about. I'm whooping somebody's ass. But then they keep making that noise. Because they playing, they wrestling. The boys are DD10 off the top bunk. Then what do you have to do? You have to go and look in the room and tell everybody settle the heck down, calm down, or belts coming out and you whooping tail. That's the same thing you have to do with your budget. That's the same thing you have to do with your finances, ladies and gentlemen. You have to do a budget so you can look into your finances and see what's going on. Because right now, it's a bunch of kids playing in your finances because you don't see what's going on. They're in the back room. They're in the back room making a bunch of ruckus, and you're just like, yeah, I'm just going to watch the TV. I hear it, but I know I'm supposed to go back there and look at those kids, but I'm not going to do it. And they destroy the room, and that's the exact same thing you're doing with your finances. You are destroying your finances because you don't have a budget. Plain and simple. Hopefully that analogy has helped someone, because you need a budget before you go forward, okay? Now, granted, with that budget, that will show you and depict what you actually can do with your finances, either saving and investing for your emergency fund, okay? And this is actually going to help you over the course of time. Stop trying to think of ways to get rich quick and just think of ways of securing your future, okay? The money will come. As long as you are depositing money in your investment accounts, as long as you're investing money in your savings account, the money will accumulate, the money will compound. Now, as I'm getting offline here, I want to leave you with this. Robo-advisors are a good way for hands-off investors. They are the middleman for you that are free or low management fees. Now, there's three types. You have your traditional brick and mortar investors like your Charles Schwab. They actually have people looking at it every day going in. If that's your type of thing, then so be it. Charles Schwab, Fidelity, Vanguard, etc. These are billion, and Vanguard's a $1 trillion company, but the other ones are $1 billion companies, or maybe equates to a trillion, that they will actually go in and look at all your stuff and do it for you, and you're paying for it. Or you have the Robo-Advisor, who is free or low management fee. They're going to do somewhat of the same thing, but based upon a complicated software backed by algorithms with a little bit of human intervention. Then you also have you. If you have that particular knowledge, then you can do it yourself. All right. So I'm going to go over your comments like I said before, and then I have to get out of here. I have to go work out. All right. Okay, let's see. Jay Money said he's using Betterment. Wayne Peters says, Jay Money, how's Betterment working for you? Jay Money says, fine so far. I've been with them since 2018. Hey, what's up, François? Let's see what else we got here. And Jay Money also said he uses Acorns. I used to use Acorns. Again, I told you I don't really, I don't boister about Acorns anymore because they have a lack of transparency. I like Stash and Robinhood. P-Way, is that a filter on top of the water jug? No, it's not a filter. It's spring water. What's going on? You know what, guys? Stay on the finance. Don't worry about my. You know what? I'm gonna get a curtain so you guys can stop looking at my water jug. I know it's ugly, right? But hey, anyway. Modeling 0216 on the borrowing option is great because it means liquid cash. Okay. Wealthfront will have the SEP. Yes, Wealthfront, Wayne Peters, as we went over, I know I said it redundant. Okay. Has SEP as well as Betterment. I said, seems like Betterment is catered money for the mass of the working class. Probably so. J Money Betterment also has a Betterment every day. That's a new option, I believe. J Money Cash Reserves High Yield. And what's up, Dread Mike? He said he used Acorn and Stash for holding and Robinhood for trading penny stocks and cryptocurrencies. Then Wayne Peters says, I'm opening up my retirement account this year. I'm 34 and want to get the ball rolling. And that, plain and simple, you got to get the ball rolling. Think of investments and saving as a snowball on a mountain. If it continues to roll, it becomes into an avalanche, which is basically huge savings and huge investing. This is Financial Literacy 101. My Money Makes Money. Learn money and be inspired. If you want links to the Wealthfront, it's in my description for your $5,000 management fee option, as well as other links and my email to help you guys in your finances. Again, also with my t-shirts, that's in the link as well. I thank you guys for joining this live session. I hope you guys learned quite a bit of information. If not, you can go referencing for yourself with the web pages that we went over. Anyway, take care of yourself, guys. I'll see you guys tomorrow. I'm out.